Good morning, everybody. It's 9 o'clock. We're going to start this meeting. I'm going to go through this fairly quickly. What we're going to hit on is macro data, which is what the market's doing on a large scale. And then we're going to come back and look at the micro market. And at the very end is monthly data. I have no anticipation of going over the monthly data, but I thought I would include that to make a complete presentation. The next thing are some key definitions. Real quick, days of unsold inventory is really important. It's the supply-demand ratio. Overbidding is real important because that gives us an idea of how much the buyers are feeling pressure. Of course, you can come back and read these on the YouTube archive. On the macro view of Silicon Valley, basically this is the concept of what is the market doing? And the only reason I'm looking at this is because of the concerns about the coronavirus and the impact it's had. So by looking at a very large sample size, I can reduce the time set. So this macro data is only looking at data from Saturday morning last week to Friday night this week. A full week cycle, I cut it off at midnight. Any closed data has about a 30-day delay because you need the length of time for escrows to close. But even sale activity has some delay because there's the when the buyer wants to make the offer, then there's the delay of when the seller is willing to look at the offers and then the agent reporting it. And because I use a week period of time, there's some, there's an average of 3.5 day delay right there, but it's as accurate and as current as we can get. So here we go, macro data sold prices. These are three different prices. The middle one is the median, the bottom is the 10 percentile, and the top one is the 90 percentile. So basically 80% of the homes are between these two price ranges. And remember, on macro data, I use single family homes, condos, townhouses in both San Mateo and Santa Clara County combined. And I am normally a big person of saying you don't combine condos and townhouses with single families, but for macro data, I do. Here's overbidding. This is interesting because notice that a week ago, it looks like we may have bottomed out, and buyers now, more often buyers are overbidding, not significantly over, but again, this is closings, so it's delayed. There's also some mudding up of the data because it's not a snapshot of when the offers were made, but of when those offers were closed. If you look at the percentage of overbid, it's basically flat and it's up just a tiny little bit. So from this slide, it would tend to say that the worst is behind us and the buyers are starting to feel more pressure and we may be off to the races, but that's as of about 30 days ago. Now we look at days of unsold inventory. And to me, this is the single most important indicator because it tells you what the supply and demand is. The supply is instant as of last night at midnight. The demand is measured over the past week. And this is one data set that when the data is going down, the market's actually improving. So you can see we went off the scale here, and actually it's the blue data, the raw data. So we were up to here. We were up to basically 80 days of unsold inventory, which is right at the threshold of going from a balanced marketplace into a buyer's marketplace. We just got there. It's an apex, and we've been improving every week since. The red line is compared to the 5-year median, and the gold line down here is the 5-year median, and the red line is 100%. So you can see right now, days of unsold inventory is above 100%, which is not a good thing. The market's a little bit slower, but when you look at the raw data, you're down here on the blue line, and you're somewhere around 48 days would be my guess, just from reading the graph. So 48 days is a pretty strong market. Once you hit 40, you start going into what I consider to be a seller's marketplace. Looking at total current inventory without offers accepted. And that is a mouthful, but it's important because much of the data out there, unfortunately, includes what we in the industry call active contingent, an offer that's in escrow, but the listing agent wants buyers to continue to look at it for backup offers. To me, those are not available properties. There's a contract, the person's obligated to buy, the seller's obligated to sell. The new buyer coming in the door can't go in and buy and get that property without the first transaction falling apart. So that's why I stress that these are without an accepted offer. Again, it's the blue line is the data, and you can see it's now quite a bit above the gold line, which is why the red line's above the red horizontal line. I'm not too worried about that. And the reason I'm not too worried about that is inventory is coming on the market at a rapid pace right now. the real question is, are buyers buying it up as quickly as they can? And I think the answer is going to turn out to be yes. But obviously if this inventory starts going way up, the buyers are going to say, we don't have pressure. How many listings did we gain? Because a listing is gained even if it goes into escrow. So again, the raw blue line is the raw data, and you can see we've been basically climbing. Shelter in place was announced. We were up here at somewhere around almost 600, 580 maybe new listings in a week period of time. Then we plummeted down here to somewhere around 250. So I'm sorry, that's somewhere around 580 down to somewhere around 250. So less than half the sellers were willing to come onto the market with shelter in place. Then somewhere around here, we got ability to show vacant properties. Right about here is when we could show occupied properties. For those not in the industry, there was a fair amount of confusion that got somewhat resolved late Friday afternoon on what we were supposed to be doing to showing those occupied properties. Moving on to offers accepted. What's going on with the buyer demand? Well, you can see shelter in place. The market went down. We could see vacant houses. About 40% of the marketplace came back because that's about the ratio of vacant homes to occupied homes. Right now, we're somewhere right around 75% of what you'd expect. So we're selling 75% of the normal number of homes in a marketplace, which as of Friday, which is what this data is, there was still a lot of confusion, including myself, on how do you show property to not accidentally violate the shelter in place orders. At least the industry has come up with a reasonable protocol that, in my opinion, doesn't quite meet the shelter in place order, but the shelter in place order is impossible. And the reason it's impossible is we're supposed to turn on the residential ventilation system to bring in outside air. Well, residential ventilation systems do not bring in the outside air. What's happening with the number of new closings? As shelter in place happened, the number started to decrease. Again, the blue line started to decrease, but that's because of the lag time. Most of these transactions would have been started before shelter in place was announced, but they're down, 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 down. And now all of a sudden the trend is reversed, and I expect this trend to continue to go up. And that's because we're now 30 days after when we could show vacant properties. I think next week is the end of the 30-day lag for vacant properties. And so in 2 weeks, we'll be looking at the increase based on the ability to show occupied properties. So again, that's an encouraging sign. Escrows are not only starting with offers, but they're closing with recordings. Moving on to cancellations. So this is data that I've never followed before, but if you look at the gold and the blue line, the gold line being the 5-year median, the blue line being the raw data, it's right where you'd expect it to be. And this is with slightly higher amount of inventory if you go back up several slides than you would normally have based on the 5-year median. So we have more inventory and the same number of cancellations. So we actually have fewer cancellations per listing, which would be really the measure that we should be using. So to me, that's an encouraging. People that do come on the market aren't giving up and canceling the listing. Number of expired listings. Again, this is pretty interesting data. The actual percentage says I'm slightly above 100%. But when I look at the raw counts, I'm essentially mimicking the 5-year median with more inventory on the marketplace. So again, that's encouraging. Now there's some spikes here, and it very well might be the end of the month. And I didn't think of that till just now, because there are more cancellations on the last day of the month, because when you're taking a listing, a lot of people tend to just put on the end of a month. Here's the number of withdrawals. Now you'll notice that the gold line and the red line are gone, and all I have is the raw data count. And that's because withdrawn listing is a temporary status. And once it expires, the MLS moves it to an expired listing versus keeping it as a withdrawn listing. So there's no way to go back and get past history. The best you have is right here at the beginning part of the year with less than 10, and now we're up around 30. But at the beginning part of the year, there are very few listings that are active to withdraw. And additionally, because of the holidays, there's very few old listings on the market, where withdrawn listings tend to be people that have been on the market a while and have given up. Now we're going to move on to slightly different data. We're going to look at 13 market areas. We're going to look at overbidding. And again, this requires sales price, so it's going to be going back 5 weeks. And this is where I believe my bad data point is. So if you printed out the handout, which did get out last night according to my email, you have this slide with the black X through it. Unfortunately, that is not the correct. It's actually a duplication of the DUI graph map. And so I crossed that out, and here is the correct data. So this is the amount of overbidding. So red is hot marketplaces, and you can see the bulk of Silicon Valley is red, the bulk of San Mateo County is red, the more expensive areas in San Mateo County and in Santa Clara County are in a balanced marketplace, and South County is in a balanced. The only exception is the cold area right here in the expensive areas of San Mateo County. That's actually been lagging, which is a little disappointing because that's normally where the market trends come out of, but they're actually improving, and I expect we may see some gray there next week. This is going back now 4 weeks in time. I am going to do a 5-week cycle. I just had issues with overbidding from 5 weeks ago, so I don't have it. So you can see based on overbidding 4 weeks ago, which is another 30 days. So this is 70-day-old data. Basically, you can see there's a lot more red. Now we step forward 1 week. You can see the grays expanding. Now it alternated back. The red went up northwest Santa Clara County, went back to red, but now it's back to gray. So that's where we are today. You got balanced markets up here in the gray, and that's where we started. So I've already explained it. And again, that's the second wrong graph, which is the same thing. It's the overbidding graph, supposedly, but it's really just the DUI graph. Shifting gears from overbidding to days of unsold inventory. And this shift is important because this is your most current data. This is where I would say the valley is right now. And if you look at that, it's like incredible. I mean, we're in what I would consider for the most part to be a seller's marketplace. And that's defined by a couple different variables. The two important ones are, since this is days of unsold inventory, is the 40 and 80 criteria. The bulk of the valley is selling between 40 and 80 days of going on the marketplace. That would be a gray. So these red areas are indicating that they're selling faster than 40 days. Now, there are a couple exceptions that are red, and that's the coast, South County, and Saratoga Los Gatos. Those markets are always historically much slower markets for whatever reason. So they're being red anytime they're below 75 days of unsold inventory. Their balanced marketplace is between 75 and 150. But basically, the buyers out there are going to feel pressure. They're going to sense that the market's on fire and the market's moving rapidly. So now we're going to jump back a full 5 weeks. So here's where the market was at the end of April. You can see it was mostly gray, a balanced marketplace with a fairly large area of cold marketplace, which is a buyer's marketplace in the expensive areas right on the San Mateo, Santa Clara County coast. The one exception is Foster City, which is a small area. You have to almost ignore Foster City because there's so few listings and activity in Foster City. It's hard to really measure it, and it fluctuates a lot. It's just it's statistical noise. Now you move forward 1 week, and you got some red coming back in. Now some of the red disappears. Now it comes back in with more red, even more red, and that's where we are today. So the market's been improving for, I think it's been the last 3 weeks. This is the third week of improvement, and I think this is our third week of being able to show occupied properties. The interesting thing about this weekend is this is a holiday weekend, which normally negatively impacts real estate. I'm going to be curious to see what happens, because I think there's a fair amount of people that are bored, that are somewhat honoring shelter in place, and they may actually be spending their leisure time, instead of going on a 3-day trip somewhere, looking in the real estate market. So there's some part of me that's saying that there's some chance that people that aren't going on that 3-day trip are now going to be looking at real estate, and that this will actually jump up buyer activity instead of decrease it. But it's going to be interesting to see how that goes. Now we're changing gears yet again, and this is where we go into micro market data. And each data set has 5 graphs. The first graph is going to be all 22 micro market areas, and Santa Clara County is the red line back here, and I made that a little bit bolder. The yellow line up here is condo townhouses in San Mateo County, and San Mateo County is actually pretty hard to pick out. I'll try to make it bolder for next time. But I'm going to just go through this first slide quickly normally. We'll spend our time here. It's the same data set, days of unsold inventory, and it's looking at the three different components, that being Santa Clara County, San Mateo County. These are both single family homes. And then we're looking at condo townhouses combined. So you can see how each component of the marketplace is doing. Obviously back here are some bad data points. That was when I had a bad computer issues and I was doing it by hand, and doing it by hand is a lot harder than having your computer do it for you. So this is the second slide. Now I'm going to go through the next three slides relatively quickly in the future, but I want to explain them the first time. This is the micro markets of single family homes in Santa Clara County. So you can pick out your micro market area and can see the data. Now this is the same thing for San Mateo County, single family homes, your different micro market areas. And the key here is to see that most areas are performing the same. You can see the expensive areas in San Mateo County, this line that went way off the chart. You can see why it was ice cold. It was way, way up off the charts. And you can see now it's back down here at somewhere around 65 days. So I'm just pointing that out to give you some concept. Now this is condo townhouses for both counties. And one thing that I have not pointed out this week that I should is you'll notice that there's two level steps here at the end. Up in the last data point of real data is where the data is moving up and down. How I got these flat points is all the data to the left of this first flat point is based on 5 weeks, and that's my normal indicator, and that's because I need to get a large enough sample size to get statistical significant information instead of statistical noise. This first horizontal line is based on 3 weeks of data, so I'm trying to get an idea of what's going on more rapidly. And the last one is based on 1 week of data, so it's going to be a lot more susceptible to noise, but you know, that is a reality. So I would really say you stop drawing your conclusions here. The data points to the right of that just give you an indication of where the market might be going. Now we move on to the next data set, which is a little bit easier to do, and this is my current available inventory without an accepted offer. And because Santa Clara County is the biggest, its data comes up to the top, followed by San Mateo County single family homes and the condos. And then you really can't see the other 19 micro market areas down here. So we're going to do the same thing. Here's the countywide data, very clear on what's going on. Basically, inventory is increasing. But again, there's this huge drop back here when we announced shelter in place. So we really should have been going up from somewhere up here. Although I will point out that this is about the normal level of inventory. So we've sort of caught up back to the normal trend because this levels off and gets fairly level through about middle of July, and then it actually starts decreasing if it follows a normal cycle. Here is the Santa Clara County micro market areas. And again, I'm going to step through fairly quick. You can come back and pause and look at these on your slide. They're also on the handouts, and these are condo townhouses. So now here's the number of offers. I'll actually discuss it on this slide just because on inventory and offers, Santa Clara County, San Mateo County in the gray line, and condo townhouse in the yellow line stand out because they're the largest, the sum of all these other smaller lines. And again, you can see the number of offers were up here, shelter in place, the purple vertical line, shelter in place being announced. We had a huge decrease in the number of offers that were accepted, and we're turning around and going up. And it's also encouraging, if you look at my 2 horizontal steps, that we expect, or at least I would expect based on the past 3 weeks and the past 1 week's performance, that the number of offers going forward is going to continue to go back up. So if someone was to ask me, right now we're having very much a V-shaped recovery. My biggest pause, and I don't think I'm concerned about this, but my biggest pause would be, are we going to have a W? And are we going to have a W, and the first part of the W is a V and the second part of the W is a U, and that would be, you know, does the economy end up collapsing? And so far there's really no signs of that happening from what I am noticing. So now you have the county, you have the Santa Clara County, you have San Mateo County, you have condo townhouses. We're on to the next data set, which is the number of closed transactions, which again is also based on volume. So I will use this instead of countywide data to explain the data set. Again, closed transactions, shelter in place. The reason closings continue to go up afterwards is a 30-day lag. So you can see closings actually peaked out here somewhere. If I was to pick a date, it would be somewhere around April the 6th. Not quite 30 days later, but pretty close to 30 days later. The reason it might be a little short is some escrows may have fallen. Now you can see the trend has been slowly going down, but now you come here, the last couple data points, and it's sort of interesting. The 3-week data is way up. The 1-week data is way down. I believe that if there's a processing error still in my 1-week data, I don't think I'm multiplying by 5. That's hard for me to really believe, because if you take the number up here for Santa Clara County at 450, 475, and multiply that by 5, we'd have over 2,000 sales, which would be a record. But there's some sense that maybe that's what's happening, but I don't think so. So the number is, I think the 3-week data is accurate. I think the 1-week data is wrong, and I don't know why yet. So Santa Clara, the county data, Santa Clara County data, San Mateo County data, condo townhouse data. Moving on to the next set of data. You can't make heads or tails of that. So here is where I will move over to the county data. And so here is Santa Clara County in the red line, San Mateo County in the gray line, and condo townhouse data in the yellow line. And this is looking at overbidding. So this requires sale price data. So this means that this data is delayed by 30 days. So this data does not yet reflect the ability to show occupied houses. So the trends are basically down. It is a little encouraging if you look at county data. The downward trend seems to be leveling off on the 3-week, which is the first level part, and the 1-week. And this data is performing sort of the way I'd expect it to perform. It is a little interesting seeing condo and townhouses continuing to go down. Condo and townhouses tend to respond less significantly, and they're more stable. So on that side, it really doesn't surprise me that they're not recovering quite as rapidly. Same concept here is the micro market areas for Santa Clara County. And you can see some of the data is up, but this gray data point is actually going down. This becomes interesting, and that's your affordable areas, and those might be the people that are more impacted by loss of wages because of COVID-19. And if you go back up to the maps, you'll notice that those areas actually went from red to gray. And so the low end of the marketplace seems to be doing a little bit worse. This is San Mateo County, and here is condo townhouse data. Moving on to the magnitude of overbidding. This is how much the buyers were overbidding. Here's the county data. Again, you can see the trend is basically downwards, but on the single family for both San Mateo and Santa Clara County, it's sort of leveled off and appears to potentially be going back up on the last 1-week data point, but I wouldn't put a lot of faith in this. But again, remember that's 30-day delay plus going back in 1 week in time. So you're looking at data that's, several weeks old at this point. Santa Clara County single family, San Mateo single family, condo townhouse for both counties. Now we're looking at 10 percentile pricing. And again, I'm going to do countywide data. What's happening to the prices? This is prices at the bottom part of the marketplace. Fairly stable looking data for the most part. Condo townhouses dipped down a little bit, but coming back up somewhat flat. Single family homes really didn't take much of a dip. You come all the way back here to shelter in place, and it's hard for me to pick up a number in PowerPoint versus Excel, but I'd guess about 825. And if I was to guess now, I'd guess about 850. San Mateo County has come down a little bit. You might say that was about $1.1 million, and you're at $1 million. And remember, this is only the cheapest, the most affordable, the lowest price, 10% in a given county. So the number of units involved is pretty small. So you'll see that there's more bouncing in the data point. And there's more bouncing in San Mateo County than there is in Santa Clara County, because Santa Clara County is a larger county as far as number. This is the micro market, Santa Clara, San Mateo, condo townhouse. I don't expect you to be able to pick up anything, but I do expect you to be able to come back and stop the frame if you're watching this on YouTube. Here's the median price, which is what most people follow in all 22 micro markets. Here it is for the different counties. So if you look at Santa Clara County, you were basically at 1.4. I think the real number was 1.425, and now you're about 1.38. So, there's a $40,000 price drop on $1.4 million. And again, this is, for 30 days ago plus, some spread. So the prices are basically flat. If you go into San Mateo County, you could easily argue that prices are coming down a little bit. They were up to 1.8 million up here. They're down to 1.6. Condo townhouses are basically very much similar to single family homes in Santa Clara County, basically flat. Would I be concerned about this? Not really. If you look at San Mateo County, it did this huge spike up right here, right as we went into shelter in place. If you compare the vertical spread, it's normally about the same distance between San Mateo County and Santa Clara County. Then you had this huge increase of about $175,000. So if the decrease over here is $200,000, most of that is really associated with this unexpected increase. And if I was to use my crystal ball, looking back in hindsight, I think what actually happened was, for whatever reason, the San Mateo County marketplace, the buyers overshot how much the market was going to go up in 2020, and actually overshot the benchmark of what the market could really do, all before shelter in place was announced. Moving on to the micro markets in Santa Clara County, San Mateo County, condo townhouses, and on to the next data set. Now we're looking at the 90 percentile price. And you can see this gets a little more bouncy. This gets more bouncy because now it's the top 10% price, and because you're at a high price, a little bit of fluctuation makes a big difference in your data sets and your data points. This is what's happening on the countywide basis. You can see in San Mateo County, you're basically somewhere around $3.25 million, maybe $3.2 million when shelter in place was announced. Went up to 3.7 million. But remember, most of those transactions would have been negotiated before shelter in place, came down to about 2.8, and we're now up to 3.5 million. So, and this is based on 3-week data here because it's flat, 1-week data here because it's flat. In Santa Clara County, it was more rounded over the peak. It was shooting up right as shelter in place was announced. It came down pretty rapidly, but overall, if you eliminate that high mark, it's been pretty flat through this whole period of time. You can see the 1-week data point here is up slightly from the 3-week data point, which is right on the same as the 5-week data point. If you look at condo townhouses, this is encouraging. The 3-week data is down. Doesn't surprise me, they lag behind. The 1-week data is up, and that's what I sense the market would do. You might argue this is just statistical fluctuation and may turn out that way. We'll have no way of knowing until we get there. This is Santa Clara County 90 percentile, San Mateo, condo townhouse. On to the next data set. We'll go through this one pretty quickly because it's really pretty meaningless. All the data right now is sitting here at 30 days. You can see we slowed down. We were at 25 days for San Mateo County. We were at 27 days for Santa Clara County. We were at 28 days for condo townhouses. Shelter in place announced. We got a little slower because things just didn't go quite as smoothly. This is Santa Clara County, San Mateo County, condo townhouse. Moving on to the last data slide, which is pretty meaningless also. Median days on the market. The reason this is meaningless is during shelter in place, the MLS froze the number of days on the market. So until I think it was just last Saturday, the 16th of May, homes were on the market selling with 0 days on the market because they were artificially frozen in place. This number here will have to get off the axis. Once that happens, that means 50% of the homes that are selling and getting offers accepted came on the market after the 16th of May. Here's the micro market for Santa Clara County, all at 0. Here is an example. Here is the expensive areas in San Mateo County. They never got down to the point, except for one data point here, where 50% of the homes were sold after shelter in place. So they never got down to 0 like all the others. And you can see they still look like they're trending downwards. They may turn around and reverse up, but that's the slowest marketplace. So there was a lot of inventory. So what had been on the market was enough to be 50% of the marketplace. Here's condo and townhouse data. And this is the actual data set for the different micro markets. If you want to get an actual raw data place, this is for Santa Clara County. This is San Mateo County. This is condo townhouse. And with that, I wanted to hit a few recaps. Basically, shelter in place was announced on the 16th, which is when I think it would have impacted the real estate market. On the 31st of March, real estate was defined as an essential business and we could show vacant homes. On the 4th of May, we were able to show non-vacant homes. It wasn't until the 12th that the state issued their very confusing guidelines on what we could and couldn't do on occupied properties. And it wasn't until yesterday, the 22nd at 1 o'clock, that we got some clarification on the contradictions and eliminating the impossible criteria. So I believe that this is sort of the first halfway new normal way of showing real estate with obviously the COVID-19 protocol. So we're not going to be back to where we were. This is just a slide to say where we are. And after that, I go into the monthly data, and I'm not planning on doing that. So I'll come back here, let you guys take notes, suggest. And first I had Mark's hand up, and then I have Gustavo's hand up, and we only have 5 minutes left. So if you guys could be quick. Go ahead, Mark.
Hey, Richard, real quick then. It's more of a question. You know, I like the slides you show where you show like a heat map of what's going on in San Mateo and Santa Clara County. That was towards the beginning.
Yep.
If you could, was that just purely on single family homes? Was that on condo? Was that everything, or was that just one particular market?
It is single family, good point. It is single family homes in the geographical area being shown as best I could. And the reason I say the best I could is, for example, Hillsborough shares a zip code with the Bay Cities, but it's really an expensive area. I think that's the area, and I have to go back and look at it. So yeah, it's not 100% accurate, but it's based on single family homes in the zip code area shown. But my data is based on the real estate areas. So the zip code and the real estate areas are not 100% match.
Yeah, what I was going to say is that those heat maps are great. And if you could also maybe focus on condos and townhouses the next time you do a heat map, if that's possible. I don't know if it is or not.
It's too much work.
Okay.
And the condo townhouse marketplace really doesn't dictate where the market's going.
Okay, fair enough. Thanks.
Gustavo, you're up.
Hey, quick question. You know, I keep hearing that we have these massive layoffs, but I'm not seeing any effect to the real estate market. Why is that?
The massive layoffs, as far as I know, are not happening to the workers that can afford Silicon Valley real estate prices. And I think the layoffs may be why 4, 9, and 11, which has been a hotspot, is actually becoming cool, because the people that are getting laid off might be able to afford in that area. And now with their layoff, they can't afford anything. So for the most part, the engineers that the double engineers that can afford to buy a median price home in this valley, for the most part, are not getting laid off. And therefore they're going forward. And, you know, people like Google are letting people work from home. I think the biggest threat that Silicon Valley has are some of our engineers going to say, hey, let's get out of Silicon Valley. Let's go out to beautiful, warm Stockton or up to beautiful, warm Sacramento. Too hot for my personal taste. Let's telecommute into work, except for maybe 1 or 2 days a month, and have a higher quality of life because our home prices are a lot less. Anyone else have a question that they want to raise their hand? We have 3 minutes left. If not, I would love other feedback like Mark gave me on what you guys would like me to do different for next week. The handout, I did get that posted early, and that's here. The handout, I did not catch my error in my graph until after it was out there. There's no way for me to correct it. So just, if you do go back and review the handout, remember I think it was the DUI graph was the overbig graph for the 23rd, which is shown twice.
And Richard, this is Mark again. I'm sorry. Just again, I want to confirm, it's okay for me to share that link from YouTube on my mastermind Facebook.
It's out there. It's out there for the world. People can do whatever they want. You know.
Always want to confirm. Thanks, bud.
No problem.
Good job. Thank you, Richard.
Hold on. Someone sent a chat. Let me see what that is. Oh, thank you. You're welcome.
Yeah, thanks, Richard.
You're welcome.
See you next week.
90 seconds left. Anyone shy want to throw out, or should I end the meeting? All right. See everybody next week.